Hello there, my friends. Chris Marcus here with you on Friday, October 6th. Today, we just have a quick video about the labor report, which came out this morning. It's always the first Friday of every month. And that's one of the biggest economic indicators that Wall Street looks to now. Is it by any means, in my opinion, an accurate barometer of what's really going on in the labor market? No. And as I've mentioned before, if you want to head over to John Williams' Shadow Stats, you can see just how funky and skewed some of these numbers are, and how they stop counting people that aren't in the labor force anymore or have just given up looking for work. So in the end, if you're really trying to get an idea of what's going on, I don't think that's the best place to look myself. But to the degree that, at least in this Wall Street matrix, everybody else looks to it and reacts on it, the banks get all wild and wet themselves over it, which what was interesting today was that it showed for the first time in a couple of years that the economy actually shed jobs. Of course, then there's some other part of it saying the opposite, so you can't even really get a straight story out of that one indicator. Yet, what's the point? What does it matter? What can we actually take away from this? Here's one way of thinking of it. The whole party comes down to, at least from the Wall Street perspective, okay, the jobs are doing this. What is the Federal Reserve going to do? Are they going to raise or lower interest rates? Translation again, is more money going to be printed, or are we ever going to see the unprinting of what's actually been printed? And what does the Fed always say? Well, we'll look at the data and we'll respond accordingly, which I don't even know if I want to go on record saying this, but that actually would sound plausible enough, except that, you know, there's always some reason why it's not really the right time to raise interest rates. And yes, I'm saying we haven't raised interest rates yet because when you have, well, I don't even know if you would have called what we had leading up to the crisis a normal interest environment. Again, keep in mind, this is not normal interest would be where borrowers want to borrow and where lenders want to lend. And hardly the case. I mean, you essentially have a bunch of bankers. They call themselves the Federal Reserves, sew up some costumes, and just decide whatever they feel the interest rate should be. Shockingly enough, when you take interest rates down to 1 or 0%, you inflate asset bubbles. We saw this with .com, we saw it with subprime, and we're seeing it kind of all of the above now. So sure, I mean, it's easy to say, well, the jobs did this, the jobs did that. Again, it's all based on the cheap financing and all the printed money. Otherwise, why not take it away and see what really happens? But in my opinion, again, I go back and forth on how much the Fed. I don't continue to believe that most of what they say is actually genuine information that at least they're trying to give you. I don't know if they're kind of clueless or just flat out lying. Maybe some mix of the two. In the end, what can be instructive is looking at their actions because, you know, all this printed money was supposed to fix everything. And now here we are, gotten up to 1% already, job market slowing down again. You can only imagine what would happen if you actually had real interest rates, which is the exact reason why they haven't raised interest rates. I wonder if even the Fed can realize that if they did, you know, the same thing that happened when Greenspan raised interest rates following when he took it down to 1% and fueled the housing bubble. And when he started raising them, people couldn't afford the higher interest. So just, that's a simple way of thinking it in a nutshell. Now imagine all these trillions of dollars of derivatives that get piled on top of that, as best as I can figure, are probably insolvent with any sort of real interest rate. So take the labor report with a grain of salt. It's not the most important thing. But in the end, understanding really the hole that the corner that the Fed has backed itself into, how that has to play out longer, why you hear people talking about gold or even cryptos as a solution or real assets that aren't paper things traded by the bank. And if any of this doesn't make sense, watch this again, because when you really get that, all of a sudden it's like you can see the future before it happens, and certainly makes it a lot easier. I find investing a lot easier, even if it requires patience, but when you understand why some of these things that are portrayed as complete mysteries, but if you really can see why they're happening, the forces that almost make certain outcomes inevitable, and I think that can be life-changing. So leave your thoughts below, and as always, have a great weekend, and we'll see you again on Monday.